Let's head into the crypto space. Another sell-off in Bitcoin, so it fall to below 85,000 US dollars overnight. Let's break it down of what we're seeing with that crypto pullback and essentially shifting sentiment across digital assets, and what's the latest in other assets such as gold as well. Bisher Khudeira is joining us from Stormrake. Bisher, welcome back. Let's begin then with Bitcoin. Another significant step lower overnight. What was the catalyst for this? Because of course also we've seen more broadly on global markets the effect this potential rate hike in Japan is having.
Thank you for having me back on. If you recall, when we were last having a chat, we outlined that there was going to be some stress in the Bitcoin and crypto markets because of those tightening of financial conditions out of Japan. Those bond yields ripping up meant that Japan, as being the world's cheap credit factory for the last 20, 30 years, is now causing a lot of margin calls on the institutional level where they're having to sell assets in order to meet short-term liabilities. We've seen the yen carry trade get pricked a couple of times over the last few years, more recently in 2023 and August of 2024, we had seen Bitcoin drop in 30% in response to a weakening dollar against the yen and an increase in yields coming out of the Japanese bonds. But this is, I believe, a short-term permeation in the market, primarily because the Japanese government, being 270% debt to GDP ratio, cannot afford long-dated bond yields, the 10, 20, 30 years being sky high as they are now. There's going to be some level of intervention coming in from the Bank of Japan or even from the Federal Reserve via a swap function in order to reduce those borrowing costs, because it would otherwise send the Japanese government insolvent, and I don't think the Bank of Japan is going to let that happen.
Nonetheless, when we look at the crypto market, I see some observing that sentiment is a mix of fear and resignation. Would you go that far? What's the outlook? I mean, clearly it is negative.
Yeah, look, it hasn't been great. Market prices have dropped down about 35% from the recent all-time high that we posted in October, but sentiment is quite fickle in the space. I remember when we jumped on to the AusBiz following the FTX collapse, and it drove market prices down to about 15,000 US dollars only a few short years ago. The sentiment there was maximum fear, lots of concern, a lot of counterparty risk that people were concerned about, and contagion effect that would otherwise have. And what we said is, whilst there is contagion effect and risks in the crypto market, as there are now, but very different, being driven from a macro environment, we have to understand that the Bitcoin network is quite resilient, and price and network are two different things. So as long as the network continues to operate, and as operators outlined per the Bitcoin white paper, we remain bullish. So sentiment changes quite quickly. When we were at all-time highs, people were calling for 150, 200K, which I still believe is in play within the next 12 months. But then when we had come off, as we have now people are calling for 50,000. So people tend to extrapolate within the crypto markets, primarily because of its volatility. It does allow people's imaginations run wild with regards to short-term price targets.
Now, Bisher, the prospect of a US rate cut has clearly been a tailwind for risk assets. If that comes to pass and they make that decision in a week or so, are we likely to see much movement in an asset such as Bitcoin, or is it already priced in, therefore perhaps not?
Well, we haven't really seen the impacts of it yet, especially considering that quantitative tightening or the balance sheet runoff that was occurring at the Federal Reserve level has only just come into effect December 1st. And these aren't immediate liquidity injections. So, for example, during the COVID crash, there was an immediate liquidity injection, and that's why risk assets had that V-shaped recovery straight to the upside. You know, when Bitcoin got crunched to 3,000 US dollars, that liquidity injection coming in really set the tone, especially as they cut interest rates quite aggressively to support that stimulus. But to keep in mind that we're in a completely different macro regime now. So whilst they've stopped QT, it doesn't necessarily mean that they've gone jumping straight back into quantitative easing. The interest rate cut, whilst it is going to be a boon for risk assets over time, I think the long-term tailwind that we're going to be experiencing is the end of the balance sheet runoff and the continued accumulation of treasuries. And what that will do essentially is drive the yields down especially on the 10, 20, 30-year US Treasuries. That will mean that the yields are suppressed in the bond market, people's risk appetite are going to come out, and if the risk-free rate goes down to 2-3%, which is where I assume they're going to be wanting it, especially over the next year or two with Trump being a Trump administration, they want the rates as low as possible to refinance their debt. They've got $38 trillion of it. So I think that whilst risk assets got crunched in the moment, anybody who buys that discount 12 months from now is going to realize that risk reevaluation is not so much the risk of asset value loss. It's actually going to be more of a currency debasement trade, because there's going to be a bit of a soft default, I anticipate, out of the United States. $38 trillion of national debt. You're not going to be able to get that out without some sort of debt restructuring. And I think that will be a quiet, soft default, which would lead to structural inflation, which should push Bitcoin and assets such as gold a lot higher from where we are now.
And you talk about that currency debasement. So, the US dollar is it's been the worst month for the dollar in the past decade, I think. Do you expect that that's going to continue to deteriorate?
Yeah, look, it would obviously in the short term, what this does is it actually creates dollar demand. So what happens in a credit crunch, such as, we've seen the yen carry trade unwind, because people have been levered to the hilt, borrowing against the yen, buying US dollars, and then buying US assets, any drop in that dollar yen cross rate is going to be costing them quite dearly and eating into the yields that they were chasing outside of Japan. Now, what happens is when the US dollar falls and is quite soft, it actually causes a lot of asset sales to be triggered in order to cover those short-term liabilities. So from my perspective, the softer US dollar and a Fed cutting interest rates, which would make obviously US dollars a little bit easier to come by, is more of a function of liquidity than what interest rates are going to be driving. So whilst a short-term drop in the US dollar will actually be a weight on risk assets, as people are going to be selling assets, particularly the far end of the risk curve, in order to meet those obligations. We believe that with the interest rate coming in, the supporting and accommodative nature of the balance sheets in order to take on US Treasuries, and some sort of intervention by the Bank of Japan to come in to support the tail end of their yield curve, is going to be quite accommodative for risk assets, and that's where Bitcoin's going to come in.